Hello, all, and welcome to Risk Out's first ever cannabis and hemp workshop, navigating compliance challenges for cannabis-related businesses. We are so excited to have you all joining us today for this very exciting session. Now, before we dive into today's content, let's run through a few housekeeping items. Risk Out will be sharing all of the workshop resources, including the slides, the handouts, and today's recording in a follow-up email, so be sure to keep an eye on your inbox. We'll also want these sessions to be as valuable for you as possible, so we strongly encourage you to ask any questions you may have throughout the session utilizing the questions section of the webinar panel on the right side of your screen. And in addition to that, we will be running a few polls throughout today's webinar to better understand our audience, so your participation is greatly appreciated. For those of you that are joining us for the first time, Risk Out is a team of former bankers, regulators, and industry experts that have joined together to help community financial institutions unlock complex markets to increase deposits from within their own backyard. Through both software and services, Risk Out reduces the time, effort, and uncertainty around expanding into new markets so you can increase your footprint without having to open new branches. If you're interested in learning more, visit riskout.com and get in touch. To accompany this workshop, our team has compiled 3 valuable resources for you that can be found in the handouts section of the GoToWebinar panel. That includes a policy template, a risk assessment, and an ROI calculator, all built to guide cannabis and hemp programs. We encourage you to go ahead and download those assets now so you can follow along with our experts as they work through each of these documents. We do have another webinar that's coming up next month that's entitled Navigating the Corporate Transparency Act, the final BOI rule. In this session, we'll dive into the eagerly awaited guidance around new reporting requirements that will go into effect on January 1st of 2024 to make sure that you're as prepared as possible for these changes and what they'll entail. Register today at riskout.com, and we look forward to seeing you there. And without further ado, I'll go ahead and pass it over to today's presenters to dive into our webinar. Take it away, Brian and Kristen.
Good afternoon, everyone. Hope you're doing well. My name is Brian Novak. I am a senior compliance specialist here at Risk Out. I've been here for several months now, and I am reporting to you live outside of Philadelphia. Yes, the team that beat Tom Brady and the Patriots in the Super Bowl with a backup quarterback. My prior experience has been at the Federal Reserve Bank of Philadelphia as a bank examiner, as well as a few public accounting and consulting companies where I specialized in commercial real estate, BSA AML, and really those higher risk areas. Kristen?
Thank you, Brian. I am Kristen Parker. I'm located out of Asheville, North Carolina. I have been at Risk Out for almost 3 years. I'm now the VP of Compliance and Operations. I was in banking for about 20 years before that as a BSA officer for most of that career. And I focused my career on community financial institutions, and usually the ones that dive into a little bit riskier areas. So I've got quite a bit of experience from a cheeks in the seats perspective on how to run these programs effectively and efficiently. And so I took my experience, and now I work with institutions and regulators all the time on cannabis banking. And I'm excited to share what we have today, because I think you're going to really understand and leave here from a high level place what a best way is to really build a reasonable and achievable cannabis banking program. And you're also, if you decide to go through this whole thing and you're like, whoa, that's not for me, then you're going to also have the tools in your pocket to be able to know how to address that in your policies and procedures going forward. So I'm really looking forward to working with you guys through this with Brian, and I say let's rock and roll.
Awesome. And I think we do have a special guest today. If Ryan's on the line, if you could introduce yourself as well.
All right. Hi, everyone. My name is Ryan McInerney. I'm Principal of Product Strategy here at Risk Scout. I'll be coming in a little bit later to go through the ROI calculator and just some different ways to calculate profitability and how to scale a program.
Awesome. Thanks, Ryan. Oh, so we have our first poll question.
That's right. We'll get them kicked off here early. We'll have two back-to-back, and then we'll let you all take a break for the rest of the session today. And those come up and ask, what is your state's current marijuana legality? Is it medicinal? Is it medicinal and recreational? Is it neither? Or are you just not sure? We'd love to get a feel for where you are in the world today, and maybe we can tailor our session a little bit better based on those results. And look at that, y'all already have all of your responses in, so we can turn those around and show who all we have on this call today. Does look like almost 60% of our audience is fully legalized. That's both medicinal as well as recreational usage for adults. 25%, about a quarter of our audience, has no current legalization, and 17% are medicinal only. Brian, how does this stack up to what you were expecting?
Yeah, I mean, I don't think it's that much of a surprise, because as we're looking today, I believe we're at 23 states that have legalized at this point. But, you know, Kristen, love to get your thoughts as I try to bring back my screen here.
Yeah, I think it's also important that you guys know going through here, if you don't have it legal in your state, that does not count you out from being able to bank these businesses within the legal states that they are in. So I think either way, you're going to get value out of this. A lot of people are listening in probably because it's on the ballot coming up, or talks of it becoming legalized. But no, you don't necessarily have to wait for that, or the safe banking bill for that matter, to bank these businesses. So we'll get into that. I say
Perfect. Thank you for those. Yeah, we do have one more poll question before we move on, and that is coming up on your screen. We would love to get a feel for what percentage of your compliance resources are currently allocated towards identifying target customers based on risk tolerance. So that is anywhere from under 25%, 25 to 50%, 50 to 75%, and more than 75%. Give y'all just a couple seconds to get these responses in. Would love to have an understanding for how y'all are currently approaching that identification based on risk tolerance. Excellent. Another question where y'all are quick on the draw, so we'll share out these responses. And it looks like we had a tie here between the top two most common answers, that being under a quarter of our resources currently allocated, or under half but over a quarter, followed not too far behind by 51 to 75%. Nobody using over 3/4 of their resources on identifying those target customers based on risk tolerance. Kristen, is that surprising to you?
No, because we can't allocate most of our staffing towards just higher risk clients, because there's so many other things in the BSA, AML, and compliance land that need to be addressed. So that said, the fact that it's not 0% makes me happy. So you are at least spending some time on it and maybe have some resources, and maybe that's why you're here today. Brian?
Yeah, I hope we never get to over that 75% mark, but I don't think it's any surprise on where we're at with these numbers, just because of where we are in the compliance realm. So awesome.
Perfect. Thank you for answering those polls.
Yeah, so I think this goes right into this next slide, and some of you on here might know the difference. Others might be new to this, so I think it's important to distinguish that cannabis as a whole is a broad term that encompasses both marijuana and hemp. Marijuana refers to cannabis plants that contain the high levels of THC, which is that psychoactive compound that is responsible for that intoxicating effect. Hemp, on the other hand, really refers to cannabis plants with low levels of THC. So anything 0.3% or less, as well as higher levels of CBD, which is the non-intoxicating compound. CBD is one of over 100 cannabinoids found in the cannabis plant that can be derived from either hemp or marijuana. Other popular cannabinoids include CBG, CBN, CBC, and I think the list just goes on and on. Currently, only hemp and hemp-derived CBD are legal in the United States. Hemp is under the jurisdiction of the USDA, and CBD is under the jurisdiction of the FDA. And as we know, especially from our poll question, marijuana is not legal at the federal level, but it's legal at some states, which really, makes the banking industry complex when we're talking about cannabis, hence why we're here today. And then going to this next slide, we've gone over the fact that we have over 24 states at this point that have legalized cannabis at some, whether it's recreational or medicinal. But the problem that we have is that it's being done by a state level, and there's more and more financial institutions that are curious about whether to bank cannabis or not. And what we're seeing is that, there's a lot of money that are, no pun intended, but it's sitting on the streets, right? It's being transported from the dispensary to this location and then to, potentially a commercial warehouse that you might drive by, while you're going to work and you just don't know it. The industry as a whole is just underbanked, and hopefully that's why, we can present this in a way where, it provides that further dialogue in the future to, help your communities in banking something that's so underserved. And how do you do that, right? So at a high level, there's two ways. There is charging a monthly fee, anywhere from, as you can see, $500 to $2,500 a month for a checking account. And then there's also a way where, every cash deposit that is brought in by the customer, they're charged, hypothetically, let's say you charge them 0.25 percentage point for every deposit. So you're able to charge those items increased fee income. And then hopefully, as you have a successful deposit program, eventually you'll go into the exploratory phase of lending. And we at RiskOut have seen lending be done. We've seen it be done in a compliant way where the regulators don't have any issues as long as you're doing it properly with the right policies and procedures and staff. Kristen, anything to add on this?
I think it's just really important to realize that regardless of whether or not it's in your institution's risk appetite to actively bank cannabis, if you're in a state where it's legal, they're going to find a way to bank somehow, and that may be under the guise of another business that they're kind of pulling the wool over your eyes. So whether you like it or not, you probably are already banking these. And what we see a lot of times is it's harder to not bank them than it is to bank them in some occasions. You may be like, Kristen, you're nuts. That's not true. But when you have written in your policy that you absolutely do not bank these people, then your regulators, like your Brian's and your Ryan on this call, or former OCC and Fed Reserve, is that they're going to come in and say, well, tell me how you make sure that you're not banking these guys. And proving that is oftentimes harder than just saying, okay, these are the ones that we do want to bank, and this is how we filter to make sure we know our customers and they fit within our risk appetite. So either way, that whether you're banking them or not, you need to address it in your policies, not just in your policies, but in your procedures. And then it needs to be educated throughout the institution about your decision so that they can detect and redirect those types of businesses to the right parties for the right conversations. So it is a public safety issue. It is a problem that, I've in my lifetime as being a banker, I was in 3 different robberies. Is the answer to go ahead and put all of the cash from cannabis businesses straight into your branches at your institutions? No, there's different solutions for, addressing those issues as well. So we're going to talk through a lot of that today as we go through this, because the eensy beensy little details that people, at a high level say, yes, I do, or no, I don't want to bank it. You got to think down into the nitty gritty to really understand truly, is it in your risk appetite? And then if it is, how are we going to address the other risks that are involved with you banking these businesses?
Yeah, and so if you haven't in the past 30 seconds, write down on your to-do list to go back to your policy and make sure that the verbiage of, we do not bank cannabis or marijuana or hemp, you might want to just revise that language, because do you truly 100% know that you do not have any sort of cannabis related customers at your institution? Is important. Just going back to Kristen's point, as far as when your examiners come in, to prove that point on you truly don't have those customers. So again, just go back and revise that verbiage.
I also think it's also important to realize here, we do talk about average fee income. That has really varied greatly between state to state and even within its own jurisdictions. There are different approaches different institutions are taking. We do see it range quite a bit. We used to be able to say, oh, on average, it was, at least $1,000 a month. Well, that's not necessarily the case in the places that banks and credit unions are getting in on it. And it's becoming a little bit more competitive. So if you ever have any questions directly about what the fee structure should look like for your institution, I'm going to start by saying that it should be based on your program goals. If your program goals is to grow deposits, maybe you get a little bit more creative and lessen the fees to attract more folks. If it is for fee income, there's creative ways there. So we could offline talk about that all day long with you. We've got definitely different best practices for those different things and for your location that you are attempting to bank.
And Kristen, before I move on to the next slide, just because we have it in bold, and I think you know a little bit about this. Can you talk about variance tracking and how that encompasses everything?
Yeah. So a lot of times in the world of cannabis, we already talked so much about how it's cash intensive, and a lot of times the cash intensiveness scares institutions away because we can't source cash very easily like we can ACH payments, wires, so on and so forth, where there's a comfort level. A lot of times too, you're dealing with legacy cash that may have already existed before these businesses had the opportunity to go bank somewhere. So there's a lot of different nuances in the banking space that make us uncomfortable. When we are trying to understand the cash activity compared to the sales activity, there are definitely different approaches that exist out there for institutions that are banking cannabis. I think it's important to know that when the 2014 MRB guidance came out from FinCEN, that is the only guidance that we've really had from, we have no regulation. So there's no one way that banks and credit unions are required to monitor these types of businesses. So just keep that in mind as if you get through this and you're like, yeah, this all seems great and gravy, and we think it might be on our risk appetite, or we've got the tools here to determine whether or not we truly want to bank these businesses. Don't let the cash intensiveness scare you, because there are ways to understand the sales revenue versus the inflows to your institution very easily, very obtainable in a way that doesn't slow your processes down for ensuring that the activity in the account is commensurate with the stated purpose of the business.
And you had also mentioned legacy cash. Do you want to touch on that now, or on our next slide, or maybe even?
Let's move on a minute, and we'll bring it back up here in a little bit.
Awesome. I'll let you take this away.
Yeah, so this is just a little peek into what RiskOut does. We do help institutions bank cannabis. We are not here to replace your existing BSA AML program as of yet. And when you think about RiskOut, we're here to really help institutions bank not just their cannabis businesses successfully, but any of their higher risk verticals that they may have, or just higher risk clients that require more burdensome touch points. So this is a little sneak peek into how we fit into the traditional processes at an institution, and how we help enhance your current processes and get you out of the manual workflows that we all know we are guilty of having to be in many times. That just slows us down. So we can dive into that deeper if you guys choose to, but I say let's get to the nitty gritty of the cannabis.
Awesome. All right. So now we are going to go through, can you see? Yeah, I think you can see this okay. We're going to go through our official policy template. So this is not going to be something where, you know, we send this to you and automatically you are free to go and you can now bank cannabis or anything in regards to that with this. It's strictly a template. It's going to need some work based off of the size and risk profile of your institution. But this is going to give us a good idea of what the policy will look like. And, you know, maybe as we go through it, feel free to, you know, put some questions in and Ethan can let us know.
Hey, before we start, will you make this about a little bit larger on the left side of your screen? You see the 100%?
Yeah, sorry.
There we go.
Better?
Much better.
Awesome. So
I'll start by saying this policy was built and has been tested alongside all of the regulatory agencies of the institutions we bank, which, you know, ranges from state organizations, the FDIC to the OCC and so on and so forth. When this was built, we didn't specify it to just marijuana because, again, cannabis encompasses all different definitions of hemp, CBD, and cannabis. Some of our institutions will pull out and just do a strictly cannabis one, a strictly hemp one, but you can really encompass it all in one so you're not boring your board every year with addressing these, and it shows that you comprehensively thought through the different risks involved in banking both hemp, cannabis, and CBD.
yeah, so as you can see, you know, it's going to start with the policy statement and then your definitions of cannabis. Talks about our, you know, farm bill, the Cole memo, and then our FinCEN expectations.
We always like to start with a lot of where did this come from? How did we even get here to start this conversation? So if your board is really digging through here and they have never, you know, they're really risk averse and maybe they only associate cannabis with the Woodstock and they don't want anything to do with it because they're morally opposed, they can at least get a thorough understanding of the well thought through legal timeline and amendments and whatnots that have passed, memo guidance that have come out that gives us direction on how to bank these so that once we get into it, we better understand why we're even having this conversation and we go step by step through the policy with them. So let them know that we just didn't pull it out of a hat because we want to bank it. There are guidances out there that exist that we are building this policy based off of.
So now that we went through kind of the beginning stage of the policy and highlighted definitions and FinCEN guidance and things like that, now we're talking about the onboarding process and that ongoing monitoring that you're going to do for each account. Again, this is generic, but it should give you an idea as far as what it entails. Kristen, do you want to, at a high level, just kind of go over what the onboarding process is with our platform?
Yeah, so I'll say in general, an onboarding process, I think when we back up a second, RiskOut was built because I ran, not because of me, I wish I could say it was built because of me, but it was built with people in mind, which are BSA officers and your account opening officers and all the people that are involved in all of the onboarding and ongoing process of managing your more higher burdensome customers or members. So when we built Risk Out, we took into account that there's a lot of silos that can happen during the account opening process. You have your business development officers, you have your compliance team, you have your deposit operations team, and everybody needs to be, have some type of hand in here, but there's no real cohesive way of making and ensuring that the ball isn't dropped somewhere, that maybe somebody has a piece of information so-and-so needs to know to make the decision, but they didn't provide it with the thing, and it would have changed your whole decisioning process. So we really built Risk Out to encompass and streamline those processes. Now, you don't have to have Risk Out to do this successfully. So we'll walk through what it's like to do the best practice for onboarding in general, which we've again worked alongside the regulators to understand what they're looking for, so that we can help our institutions build reasonable and achievable programs, whether or not they want to do that at a smaller scale manually or at a larger scale where perhaps that they need to automate because there's so much coming in and out. And we do have a lot of institutions that have very small programs that are just kind of getting their feet wet, and they maybe have less than a dozen, maybe 2 dozen customers in this space. Then we have institutions that bank nationwide. And so it's very, no matter what size program, the same concept for onboarding needs to happen. So when we start with onboarding, we have to know who our customer is, right? We have to know who the prospect is, rather, in that perspective, because we've got to ensure, based on our program goals and our risk appetite, that these businesses would be somebody we would even entertain to look at. And if you are of the process now where you have maybe a handful of questions you're able to plug into the traditional account opening processes that happen in branches or through your private banking group, that's really not going to be enough information to really understand that these businesses are who they say they are, and that they fit your risk appetite based on your program goals as well. So it's really important that you have some type of robust onboarding and pre-screening process in place, so that you are ensuring that they fit in your risk appetite prior to becoming your customers, because it's even harder to get them off the books after they are your customer through all the bureaucracy that can happen at institutions when it comes to offboard somebody you've already onboarded. So the best practice for onboarding is to have some type of application process in place that is tailored to help you really understand who this prospect is, in accordance to with whatever your institution has identified as the biggest risks or red flags that you maybe wouldn't want to bank. When you're getting that application back, along with any licensing information, beneficial ownership information, all of that jazz, then you're able to take that information and do your due diligence to ensure that you have validated the licensing, that they are truly a legal operating business, that you have validated any of their beneficial owners, ensured that they aren't maybe operating multi-state, all these different risk factors that can come into play, validating that they don't have maybe any potential reputational risks for your institution, that they aren't on any watch lists, all of that. You can't determine that if you don't have a robust application process. So the onboarding process should look at it as your frontline staff can either help them through an application that is then submitted to the right party for vetting and approving or declining, or they are on the front line detecting and redirecting them to the right assigned parties at the institution who are educated in this space, that can take that application, vet it out, and ensure that the business is who they say they are, and they are in good graces with whatever your current risk appetite is. So a lot of times that looks like at institutions, you'll have your frontline staff do the first part of the vetting they would get the application back, they check it over. If it all looks good, they send it on to their compliance team for final approval before opening.
So the hypothetically, let's say the application is completed, whether it's done, manually or whether it's done through RiskOut's platform. Once that application is approved, what type of ongoing monitoring would there be, and what would you suggest as far as best practices?
Yeah, so on the ongoing monitoring side, and we always say that the application process can occasionally be painful, but that's when you're usually getting the most answers out of your businesses, because they're not your customer yet. They want to be, so they will do whatever you want, give you whatever you want, and then they become your customer, and it's like ghost town USA. You can't get any information from them, and that could be twofold, right? That can be because your onboarding team didn't have a very good laying the expectations conversation with that prospect prior to that final approval. Maybe they didn't have them sign off on attestations saying that they will do all these certain things that you wish that they would do. But from an ongoing monitoring perspective, there should be some type of reoccurring cadence where you are collecting information from that business to ensure that they are still operating within your institution's risk appetite. So there should be some type of due diligence on some type of reoccurring basis, information collection to revalidate what was on their application, because I'm telling you from personal experience and now experience with institutions all over the US, as if the customer you onboard today as a cannabis customer who fits your risk appetite, 6 months later, they may not, because they are rapidly changing and evolving. The industry is going through a big change right now, and a lot of consolidation happening. Prices are falling on some cannabis products, so they're having to do layoffs, and there's a lot of moving and shaking, and people are getting creative. So you can't really truly understand that the activity occurring in the account is really reasonable for the nature of the business if you don't know what the nature of that business is at the time of that review. So usually about every 6 months, our institutions will send out a questionnaire to their customers that says, hey, can you revalidate this information? And if anything's changed, let us know. And then really a best practice from there is understanding the cash inflows at the institution. If it's a very cash intensive business, you may want to consider some type of variance tracking monitoring where you're comparing the sales activity to the inflows at your institution, so you can ensure that the activity is close enough, that matches well enough. You still understand that maybe not all the cash is always going to hit your institution. Maybe they're paying some invoices in cash, that's fine. But as long as you're proving that you know your customer from that standpoint of understanding, yes, they're cash intensive, but we are ensuring that the cash activity matches and what they are reporting as sales revenue to the government, then we feel good about that. The activity is reasonable for the state and nature of the business. There should be some type of robust SAR tracking, obviously, involved in that. Cannabis businesses are your direct cannabis businesses require reoccurring SAR filings every 90 days, whether they've done something suspicious or not. And so you'll want to think through, how do I have the staffing for that? Do I have the right tools to track this? Do I understand who needs a SAR filing, who doesn't, what type of SAR filing they require, what doesn't? So from an ongoing monitoring piece, you're going to also need to understand that from those 90-day SAR periods that you're tracking all of that activity that you may want to report on those SAR reports, maybe through a case or some other mechanism of keeping notes in there. You'll want to really utilize your transaction monitoring, your traditional transaction monitoring system, if you're able to kind of tweak some alerts or put them in cohorts or groups based on their location, based on the nature of their operation. That may help you better understand from a suspicious activity monitoring standpoint, from a daily transaction monitoring system that you may be able to pick out from there additional pieces that you wouldn't necessarily pick up from maybe variance tracking or just your frontline staff picking up on stuff when they're making any transactions at the branch. We also encourage adverse media monitoring and license monitoring. These businesses, you just never know between review cycles what they're going to get into. So adverse media monitoring at least gives you the ability to know if there's some major licensing event or some major, news event that happens. You're not finding at the time of your review, you're finding out the next day after it happens, so you can take action before it potentially, maybe from a reputational standpoint, negatively affects your institution. And then the licensing piece obviously is important because you want to ensure that if they are cannabis businesses, that they are actively licensed, which means that they have another authority that's looking over them to ensure that they're doing the right thing. So it's important to lay out that you're not required to be the DEA here. These are the things, the very basic things that help you run a reasonable and achievable program and protect your institution from an ongoing monitoring standpoint. You're not here to, go necessarily dig and you pull samplings and send them off to a lab yourself or do any of that. It's just there for, you are ensuring that the transactions that are occurring at your institution isn't aiding and abetting any type of illicit activity, and that you're protecting your institution against that and any reputational risk that may negatively affect you.
Awesome.
Kristen, I wanted to jump in really quick. We actually had a couple questions come in as we were speaking through that. So the first one asks, you mentioned this is an industry that's constantly changing with new regulations, fluctuating economy. How often should FI be updating their policies and procedures to reflect those market changes surrounding cannabis and marijuana?
Well, it's really depending on how big the change is. So we say at least annually you should be reviewing your policy. Your procedure should almost be a working document that you're tweaking quite often. There are good resources out there that exist, or you can even subscribe to riskout.com. We'll provide you guys with any type of pertinent information in regards to cannabis so that you will know. We'll highlight in our blogs and our resources that we send out, hey, you should consider, if you're in this state, you should consider updating your policy because X changed. So there's a lot of good resources out there that exist to help you know when maybe there's a triggering event to review or update your policy in between your normal board approval policy process. But your procedures honestly should be a working doc that you should be getting some eyes put on there as you learn, probably at least once a quarter.
Thank you for that. That's helpful. We had one other question that came in, and that asked, is there a certain amount or percentage of revenue that would change what would be considered a tier 2 cannabis related business into a tier 1 business? Or is that something that's not based on revenue at all, and it's simply on how close they're interacting with the plan itself?
Yeah, so that's a very good question, and that can vary from institution to institution's interpretation, right? Most of our institutions, and what we advise is there's direct cannabis businesses and indirect cannabis businesses. Indirect cannabis businesses are licensed. They can be plant touching. The indirect cannabis businesses just support them at some type of level. They may be receiving money from them for payment, but they are not actually a licensed cannabis business. So those are still treated as indirect, meaning, I guess in the tiered land, you'd say tier 1, tier 2, tier 3. Tier 1 would be your direct, tier 2 and tier 3 would be your indirect supporters. And that can vary. Like, one thing to add there is most all of our institutions only file their reoccurring SAR filings on their direct or tier 1 businesses. They don't file anything on their tier 2, tier 3 from the FinCEN 2014 memo guidance. That is something that if you guys, whatever we're building, if we're building a program from scratch, or if we're helping shore up or look through an existing one, If they are filing on all of them, that's a conversation you should have with your regulator, because you may be able to cut back on your SAR filing burden that you have. So that's a conversation that's much advised that you have with your regulator. We never tell you whether you should or you shouldn't. Some regulators have different views. Now I'm seeing 90% of them lean towards just the direct and tier 1. Nowadays, it used to be mixed about a year and a half, 2 years ago. So we want you to have those conversations with your regulators if you are, because you could save yourself some time.
Thank you so much.
Awesome. So that was a lot of great info. We went through the onboarding process and then also the ongoing monitoring. So with that, we're going to continue on with, we kind of just touched on the staff awareness and ongoing training. Board reporting, I don't think it's any surprise on that, but at least annually, you're going to have to report to the board. But prior to implementing your program, you're going to have to obviously get board approval and board buy-in. And I think Kristen just touched on kind of educating the board on, this isn't, necessarily like Woodstock. We're not talking about cannabis in that nature. We're talking more about, serving our community and banking an industry that's just underbanked and getting this money out of our streets here. And just going down, last thing is the risk assessment. We're going to be going live right into a risk assessment. But before I move on from the policy, Kristen, anything to add to that? Ethan, is there any other questions in the chat that we could touch on before we move on?
I don't think so from our end. Those were the 2 questions that we did have come in, but a reminder to all of our audience, if you have any that you would like to ask either Kristen or Brian, don't hesitate to go ahead and throw those in, because we love to answer them live during the session, just like we did with the last 2.
Yeah, and I really want to add in here too is that, there are a lot of pieces of the puzzle in the policy that we didn't dig into. Guys, if you've known me long enough, or you've only known me 5 seconds, I could talk about this stuff all day long. But a lot of what we're touching in the policy, we're going to touch in this risk assessment, and that's where we'll take a deep dive. So you'll get the information you need from the policy, as a downloadable. But if you have any questions that we didn't go over, just reach out directly to me or Brian, and we'll hop on the phone and we'll go over it with you.
Awesome. So without further ado, we're going to go right into our risk assessment, and I'll hand it over to Kristen on this.
Yeah, so I don't know about you, but I have a very love-hate relationship with risk assessments. I think they're horribly painful to go through sometimes, but there's no better storytelling about the health of your program and the health of your institution than to complete a risk assessment. So I have been through many iterations of risk assessments in my time. I find this one approach here that we're going through that we have all collaborated with, and again, we collaborate with everything with regulators, and you're going to find this one maybe hopefully not so painful and a little bit more user friendly. So when we go through the risk assessment, again, we're going to lay out the purpose of the intent of the risk assessment. We're also going to define what cannabis is, and again, because there are some boards out there that don't just want the summary of this, they want to read the whole risk assessment, especially when it's something juicy like cannabis. So we refer to marijuana as THC cannabis throughout this. That is because the word marijuana is really, it's got some negative connotations in history, and so we traditionally steer clear of using the word marijuana, and you'll see THC cannabis mentioned throughout here quite a bit. We already talked about the different categories, direct and indirect. We did add ancillary in here because some people really just also want to call out that there may be different businesses that don't fall into the category of getting a ton of revenue from direct plant touching businesses, but they just kind of accidentally serve this area. Maybe because they are a farming supply business who happen to carry fertilizer that the business needs, or any type of energy company who just by default has to provide power to that business, even though they don't even know it potentially. So we're going to talk about 5 categories here. When we're talking about this space, We want to talk about the legalization status. That means specific to your area and on a federal level. We're going to talk about product lines and services that may be affected and things that need to be approached there, geographic factors, members and entities, and then the suitability to your institution. We use a low, moderate, and high risk rating. We're looking at the inherent risks, meaning these are the risks that exist because in general, they're risky. It's not specific to your institution, it's just the raw truth of the risky nature of what you guys are looking at. And then the risk mitigation is what's your institution doing to address that risk that just naturally exists. And then you're going to calculate the residual risks by taking the inherent risk and then subtracting the risk mitigation, and then you get your residual risk. And that's how you know from a low, moderate, high where you stand today. Do not use this risk assessment with a pie in the sky view of what you may want one day. The reality of a decent and very good risk assessment, well-respected risk assessment, is one that is an honest risk assessment. And sometimes it'll make you want to cry when you're going through it because you're like, whoa, I'm going to have a whole lot of work to do if I'm going to cover these risks, but it's better for you to know it now and be able to take it to your management and key executive team to say, hey, look, these are the realities of where we're at today. I'm not saying we shouldn't do it, but I need this to cover these risks here. And if they opt to move forward and you called out the risks and they didn't want to give you the budget to cover those risks, at least you covered yourself by calling it out on your risk assessment. And sometimes you do have to have a CYA trail. All right. From a legalization status, well, in general, we like to use quantitative and qualitative measures to better understand the risks to your institution. And we like to keep that theme throughout the entire risk assessment. Quantitative data involves numerical measurements and counts, enabling you to have valuable insight into the frequency, magnitude, or occurrence of a specific phenomenon. I say that you should have that information if you already have a program, but if you don't have a program yet, you may not have that information. So this part may be super light for you. Say, we may think that it's going to have this much, but you may end up with this much. Or you may say, I don't know that number yet, but we are anticipating X, Y, Z. Qualitative data interprets the language and explores the factors driving behaviors, meaning we're going to analyze the why and the how and the what aspects of the operations. And then on the right side here, go back up. We're going to, over here on the right side, define our risk mitigation plan here. And we're going to make sure that it is well comprehensive. And I've seen risk assessments, I've gotten these risk assessments back from institutions who wanted to take it on their own, and they have 2 or 3 sentences in each section. That's not okay. I mean, it's okay if you have a brand new program and you don't quite know yet, but your risk mitigation plan better be more than 2 or 3 sentences, because they're going to want to know what exactly you're up to and make sure that you have thought through the risks and you're covering for the risks. So we want to talk about the federal legal status. This particular risk assessment can be used for hemp as well interchangeably. But for this sake, we're going to stick with cannabis on this. So we're obviously on the federal legal level, we can say it is not legal to, at a federal level, it is not legal. And that's okay. That is a short sentence to say, but you can also say in your risk mitigation plan, if it is legal in your state, you name the law that legalized it, and any pertinent information in regards to that would be important to you. All right.
Hey, Kristen. Sorry, we had another question come in that I wanted to run by y'all. And that question asks, when y'all were developing this policy template and risk assessment, were you taking into consideration lab-produced THC products that fall under those cannabis-related products? Is that something that we need to account for separately, or how does that kind of come into the fold?
Yeah, so if within your state, and if I'm understanding the question correctly, we're probably talking about maybe your Delta 8s, your Delta 9s, maybe that they're derived from hemp, but they still are above the point, not necessarily above the 0.3 THC level, they just have concentrated levels, and they can cause psychoactive effects, and they're very controversial when it comes to the FDA, DEA. There's been some statements that come out. So if we're talking about that space, that is going to potentially vary from state to state. So we do, in the upper part of the policy, we do address that. And within here, I believe that we address that on the left side here. It is something you want to call out. So if it's in your state, they said specifically that they, I think maybe in the, let's just use the state of Texas, for example, where Delta 8 is illegal on 1 week, and then it's not legal the next, and then it is legal, and then it's not legal, because there's so many court injunctions and this, that, and the other. You will want to address that in there and say, how is your institution, whether it is in your risk appetite or not, and then whether or not, if it is, how are you going to address that? If it's not, how are you going to ensure that these institutions or that these businesses aren't going to eventually carry it or aren't just lying to you? So yes, that has been something that's been brought up, and it is encompassed, should be encompassed in the policy, and it should be addressed here in the risk assessment.
Thank you so much. Appreciate that.
Yep, you're welcome. This is where probably it's a good section to also include in here in a state and tribal legal status. It is important to note that what exactly is legal in your state and what isn't legal in your state. And if it's not legal in your state, how are you going to ensure those businesses aren't doing the illegal thing? Now, if they're licensed, if they're a hemp business and they're licensed, how much authority is looking over them to make sure that they're doing the right thing? Probably not money. But if they're cannabis, then they're more than likely, unless you're kind of in the state of Oklahoma, you're having a lot of more oversight than your hemp businesses. So your approach, your risk mitigation approach may look different for hemp than it does for cannabis. And you may have more stringent oversight over one than you do the other. But you're going to want to call out from that legal status in this section here is where it's a good section to include whether or not those other lab-derived components, THC components, are legal or not legal within your state. All right, deposit relationships. These are here to make you think through all of the different complexities that come with offering these services, these deposit services, deposit accounts to your institution. So that can mean how is it going to affect your branches? If you are going to allow these cash intensive businesses to deposit at your branches, what's your risk mitigation effort there? What is your loan to deposit ratio look like? Is your loan to deposit ratio potentially affected from that? Are you going to offer all of your deposit relationship services to these, or are you going to limit to them where they can only have wire and ACH to certain areas? Is your deposit operations team affected at all? Will you have to add any ACH codes? If you decide to use Loom or Loomis or one of those other cash transit companies, how are you going to ensure that you understand the cash activity that's being transported for CTR purposes? These are all of the things that have to be thought through in regards to the deposit relationship side of this particular risk assessment. We also have some pretty good redacted, formally done risk assessments that our institutions have gracefully allowed us to share, not their information, obviously redacted, but also provides really good kind of insight and feedback as to what other institutions are including in this area. So I'm happy to share that. If anybody wants one of these that is redacted, you can reach out to me directly and I'll be happy to share that with you. Anything to add to that part, Brian?
No, I think you covered it.
All right. And then lending relationships are their own beast. There are very successful institutions that are doing it well. And on the hemp side, there's many small business loans out there that are being approved. There are, on the cannabis side, people getting creative in regards to, what they're lending on. The biggest thing you can think of here is, well, one of the biggest things is, what is your collateral, right? You don't ever want to lend on crops. You don't want to ever lend on anything above that nature. It's usually what we see it is in the commercial lending space. The collateral is some type of building, something along those lines. And Brian might have a little bit more insight there. He's actually in the process of building out a lending policy that many of you institutions will be able to find on our website soon enough to be utilized.
Yeah, so if I could add to that, just echoing what Kristen just said, understanding the collateral pieces is most important. What I have seen, two things that have happened that it shouldn't happen is don't lend without a separate policy. If you're going to lend in the cannabis space, you need to have a separate policy. And then the second thing is going back to that collateral piece where you need to understand what your collateral is, because because of this industry and how things are always changing, but more importantly, also the effects of what's happening in the industry, right? Like the crops right now are up and down depending on where you're at in this country because of the weather, right? So it's really important to understand the collateral piece. It's also important to understand who your guarantor is. Does the guarantor, have the cash in hand or the liquid assets in hand in the event that the loan fell apart, right? But yeah, and then the last thing, just so I don't keep talking, is I have yet to see a financial institution create a lending policy and be successful in lending first before creating the deposit relationship, right? So if we think about this, it's let's execute on obtaining those deposits first and have a successful deposit program. Have constant communication with your regulators, and then if and when you want to, go in and explore the potential lending and again, have those conversations with your regulators as well.
Good points. When we go and we talk about geographic risk, we're talking about where are you banking currently? What's your footprint? And where do you plan to offer financial services? Geographic risk is complicated when it comes to cannabis. Yeah, most of them are usually in your HIDTA or your HIFCA areas, your high intensity drug trafficking areas or your crime areas. That may mean something or it may not mean anything to you based on your footprint. I live in the HIDTA area of Asheville, North Carolina, and we don't have legal cannabis here. That means that if we do get a legal cannabis past here in 30 years or so, we'll have to worry a lot about legacy cash potentially that comes in, and that's where you really understanding the HIDTA and HIFCA areas is what's the potential of there being a commingling of funds that were illicitly derived prior to there being a legal program, and that's where you get in there and really need to understand that legacy cash and how you're going to vet that out as an institution to understand if the funds that are coming into a brand new account, where were they sourced from and how can you prove that they were not potentially derived from any type of illegal activity that now they're technically being money laundered or wandering through your account. We can kind of look at the account holder base as you're thinking about that geographic risk in there as well. You really really hone in on that legacy cash piece here. At this point, this particular area points out that there are some businesses that are just inherently riskier than other businesses. But it is specifically stated by the regulators, and with guidance that recently came out in the last year or so, is you do not or should not define nor treat all members of a specific category as posing the same risk. So a grower, a mom and pop grower, does not present the same risk as a multi-state operator. You shouldn't blanket statement risk. It's essentially the point here. Not all growers create the same risk. Not all dispensaries create the same risk. I've got hemp dispensaries all down the road I live here where there's a little tiny mom and pop, and then there's this really, really, really large hemp store down the road. Those risks that they present are different because that one's in a gas station, and I'm not sure what she carries. Oh, but she also carries these guys over here, a lot different risk. They're a lot bigger. They're a multi-state operator. They, pretty everything they list on their website. I understand the business more. That risk is potentially different it is different between the two. So just saying, I'm not gonna bank growers at all. I'm not gonna bank any hemp business ever is probably not the best thing for your institution, because you may find that you end up wishing you hadn't written into your policy that you're not doing something when you had a really good customer come in here or prospect that actually did fit your risk appetite, but you blanket stated them as a grower, and you don't bank growers. We had one institution that said, I won't bank startups. Well, that's kind of hard when you're in cannabis land because it's a newer industry. So they ended up tweaking their policy and saying that while they don't prefer to, they would, because what they found was they had a lot of VC-backed, venture capitalist-backed startups that were well capitalized, that they had a huge deposit opportunity with, but because their policy stated that they didn't do it and they didn't have the right processes in place to have a policy exception process, they were having to let people walk out the door that would have probably been very good for their institution. Suitability. Are you ready to bank cannabis from a regulatory health standpoint? What is the last time you had an exam and what was the status? If you weren't satisfactory, maybe there are other things that you should be considering first before you should be banking cannabis. It's oftentimes I've seen institutions, they're kind of in trouble in this other area, but they think because it's unrelated to what they think is the risks for their cannabis, they go ahead and they put all the effort into starting something up over here, only to address it with their regulators, for the regulators to say, you've got to fix this first before you can do that. So I encourage you, if you guys are thinking about going down this pathway, just maybe have a casual conversation to start with your regulators to say, okay, based on our last exam, we feel satisfied, we feel good that we can start looking into potentially doing this, and then get their feedback, because they aren't always also scary. They a lot of times really want to provide you some good guidance because they've learned a lot over the years. And you'll find that the more that you involve them from the very beginning, the more that they feel included in knowing the size of your program, the health of your program goals. They're not going to be so caught off guard when they come in to examine your institution and you've got this whole risky portfolio that they thought either didn't exist or they thought was really small and is really large, and they didn't bring enough staffing in to examine you.
And if I could just echo that, I'm going to repeat exactly what Kristen said is, have the dialogue with your regulators prior to getting into this. It's an added plus. In addition, please, especially since you're attending this workshop, if you are going to get into this space, please make sure you have a policy in place before you conduct any business. And I say that because I have seen a financial institution bank cannabis, literally accept deposits, pertaining to cannabis and not have a policy. And then they wondered why the regulators came in and had an issue with that. So again, just have that dialogue, have a policy.
And really, just also, let's not disregard the risks that are involved in hemp. I think a lot of people just brush that across the table because it is federally legal. There are different risks to banking hemp and cannabis, and I often think that banking hemp is sometimes harder or riskier than banking cannabis because hemp is the only plant you can plant in the ground that's a legal seed that can grow until an illegal plant. You're kind of based on the THC levels. So you're always teetering on this line of, am I accidentally banking marijuana or THC cannabis when I thought I was just banking hemp? And if I am, does that trigger other regulatory requirements like SAR filings, blah, 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 all, so on and so forth? A lot of people are just like, oh, it's federally legal, I'll bank it. Don't do that. I've seen institutions get in big trouble because of them just, kind of brushing it off as just something else. So if you've built out a robust cannabis program, that's great, but don't just let hemp slide through. You're going to have to really think through the different risks and the different things to ensuring that if you're banking cannabis, you already know you crossed that federally illegal line and there's a repeat of activities that you have to do. With hemp, you could easily blur the lines, and you've just got to have it well thought out and written in your policies and procedures how you address those risks and what you're going to do if you do find out that they were a hemp business I was making, then they also opened a cannabis business in California, didn't tell me about it, and they've been commingling funds. What do I do about that? There are different risks involved, certainly. Your BSA AML audit results are important to keep in mind too. You're also going to want to think through, does my BSA, my audit teams, do my audit teams know particularly what to look for cannabis banking going forward? So if you approve this relationship, do you have the right staffing if you have an in-house audit team, or do you have the right third party that knows what they're looking for the risks of auditing your cannabis banking program? If they don't have experience there, and your regulator comes in and wants to see your latest BSA audit results and it's not noted in there, or it's very half done and they kind of don't really know what they're looking for and it's not well documented that it was reviewed, that's going to open up a lot of big cans of worms. You're going to want to make sure that you have the right audit staffing or the audit third party involved for your program going forward to evaluate it. Board buy-in, we've talked about that many times. Board buy-in is really, do they accept your cannabis banking program? Do they approve it? Do they verbally approve it? Have they been well educated? What's their reoccurring education look like? We have some institutions that actually have approved cannabis banking programs with it documented in there that somebody, 2 or 3 people have verbally opposed wanting to do this program, but hopped on in and decided to agree upon either. They just wanted it verbally documented that they are morally opposed for their own purposes. So it doesn't necessarily, at the end of the day, do they all need to sign off? Yes. But there can be different creative ways for people letting their opinions be known on there, and then they can sign off. Expertise and staffing should not be underrated at all in regards to needing the right staffing, the right expertise to keep up with your program now, concept your program, and then stay up to date on the risks involved in this industry. You can't just let one of your tellers come in and not know anything about BSA and then try to run this program. It's a slippery slope. I've seen that try to happen. It's not saying it can't be done, but there needs to be a lot of hand holding involved in that.
And
Technology. Quickly just to get through these technology. You can do these programs manually, but it's not scalable. If you're going to, we'll put it this way, if you get into a program like this and you put all of the work into building a program, do you really only want 5 customers? Or highly doubtful that you guys would invest this amount of time. You're going to end up wanting to scale up. So you're going to, if you're doing this manually, that means you're going to have to add additional staffing. If you are doing it with technology, You may have to add additional staffing, but at a much, much slower pace if you choose the right technology. And it's always about having the right technology provider that helps you design a program that's reasonable and achievable, and not having you act like the DEA, which is not a regulatory expectation. Suspicious activity reporting we've touched on many times. You're going to need to make sure that you have the right technology in place for that and the right staffing to understand and help you keep up with the different types of SAR filings. CTRs, again, if you're using cash transit, you're still responsible for filing those CTRs. A lot of times those transactions will not come in as cash, so they will not trigger your CTR process if they just come in with a regular tran code. So work with your deposit operations team or whoever it is that needs to be involved to ensure that if you're using cash transit services, when those transactions post, they're posted as cash, so you're getting the right CTR aggregations happening. And then MRB non-compliance means ensuring basically that you're ensuring the businesses are licensed appropriately for what they say they're doing, and that license does not elapse or not have any potential issues. And then you need to have an exit plan if they violate any of your rules. And then from a reputational standpoint, you need to understand who's my customer base. If I do this, are they going to turn their nose up at me and run? Or is there some type of education we can do in regards to your current client base to say, this is why we're opting to get into this, and show them that it's really better for their own public safety that you guys do this, as opposed to, you know, letting these businesses have nowhere to put their money, which creates different risks. And then if we want to scroll to the very bottom, this is where we're going to aggregate the risk assessment conclusion, where we're going to say whether it's low, medium, or high in these areas based on the aggregation of the low, medium, highs that you've determined occur after as your final risk, your residual risk still left. And then you want to write a concise conclusion statement at the bottom, summarizing what you guys have found out and then your recommendations for moving forward.
Awesome job, Kristen. With you know, a few minutes left, I know this was a lot of information. You know, we went through the slide deck, policy, risk assessment. Now I'm going to hand it over to Ryan, who is going to go over the actual ROI calculator that we have.
All right. So can everyone see this this screen?
Yes.
Great. So well, thank you everyone for having me. I've been hiding in the shadows, so glad to be out of those. So the ROI calculator, which we're going to be sharing with you, a couple different sheets. The first sheet that we're starting on here is going to be where you put your assumptions in. So when you're thinking about how you want to build your program out, a lot of the inputs that Brian and Kristen have talked about are kind of what you're going to be thinking about here. And so when you're thinking, we want this many number of customers, say eventually you want to scale your program to 30 customers or clients, you could put those right in here. Maybe you're starting off with a smaller portfolio of clients or customers that you have already had without having a software. You can put those in the program start customer account or even the current customer account. So there's a couple areas where you can kind of tweak the number of people you're going to have in this program, number of businesses. As you go farther down, we put some default numbers in here just for if you were doing fee revenue per account, a typical interest spread you're going to get on deposits if you were just lending in your traditional lending programs. Then if you were doing, say, cannabis lending or anything along those lines, you can check those or uncheck those. So I just turn these on or off, and that will reflect down the line when we start to look at the results. Some of the other items we're looking at in here, depending on what your staffing is like now, you might want to think about adding new staff as you start to scale up the program. So you can decide whether or not you're going to be adding staff members holistically. So say on the cost side, I think the cost of one staff member is $125,000. So when I get over the number of hours I'd need new FTE, new full-time employee, that would add an entire new full-time employee cost to my calculation. Versus I could put this hourly, which would be fractional. And so if I went over the amount of hours a full-time employee would have in a year, then I would only be adding the additional hour cost. And I'll show you what that looks like on the other page. So this, what I'm talking about, is this break-even analysis right here. And so when I look at the costs, which are going to be this red line, it's going to be showing what would happen if I was doing that on the full. Now I've been tweaking some of the numbers in the back end here, so some of that's not going to look 100% right, but it will when we send this over to you in a couple, maybe an hour or so. Now some of the other items on here that you're going to be looking at, customers gained per month. So depending on how quickly you want to grow that program, could be 2 customers a month, it could be 7 customers a month, whatever that growth rate is, you'd put some of those numbers in here. And then same with the customer funnel, how many prospects you expect to actually apply, and then how many of those applications you want to approve. And then lastly, how frequently are you performing the due diligence? So a lot of interesting items that you can put in. You can really tweak this however you want the program to look. At the end of the day though, what's going to be nice is a lot of these have already been set up based on what we see with different institutions. And then what you'll be able to show your, say your board or your committee is a comparison of what your program would look like today, what your program would look like if it was scaled without a software solution, and then what your program would look like if you were using RiskOut or another vendor solution that was offsetting some of the staffing needs. I apologize, I was playing with this while everyone was talking, so some of these are looking a little off. Again, here's the break-even analysis that you're going to see. So break-even analysis by customers. So number of customers you take to actually hit break-even, and then break-even analysis by month, which is going to show if you kept scaling at, say, 2 customers a month, 7 customers a month, how much time it would take for the program to be operating at break-even level. Lastly, on the back end here, what we're going to be showing you is the actual hourly calculation. So it would say, I need 50 hours for filtering prospects, and there will be an explanation to the side explaining why you need those 50 hours to filter prospects. So all of this should explain how the program would have been running. You can see how some of the assumptions would back into the results that you're going to be looking at. So it should be a pretty powerful tool in planning out what your program needs to look like to achieve profitability.
Awesome. Ethan, are there any questions in the chat pertaining to the ROI calculator?
We've not gotten any pertaining to the ROI calculator yet. I have gotten a couple about some of the other topics that we touched on. If you all would like to dive into some Q&A.
Sure.
Perfect. And thank you for sharing that, Ryan. And as a reminder, we will be sending out all of these resources likely tomorrow morning, just to make sure you guys all have those, are able to leverage those to improve your programs going forward. Kristen, this one came up while we were talking about the risk assessment, and said that you mentioned we shouldn't consider all category members as having the same risk levels. I think your example was the mom and pop shop selling cannabis compared to a multi-state grower. Those would probably have different risk levels. How would we write that into a policy to allow our institution to be flexible without coming across as being too vague that might rub a regulator the wrong way?
Oh, okay. There's really a fine balance between pinning yourself in a corner in your policy than there is being too vague, right? You don't want to look like you haven't thought it well out, but you also don't want to get a policy exception for everything. So I think it's important to lay out that, you in the policy, and I believe this verbiage is written into the policy already, is that you, on a case-by-case basis, you will assess these, not on a case-by-case, you will review every application that comes in there, and you will determine whether or not they fit into your risk appetite or not based on that. And that here are the very basic categories of what we're looking at: to make sure they're licensed, to validate the CIP information, to collect beneficial ownership information, to review adverse media, so on and so forth. You definitely don't want to say we're going to take growers with X amount of revenue or this or a this with a that. You don't want to get too nitty gritty like that. What you want to do is say, you lay out your risk appetite statement at the beginning of the policy, and then you through the onboarding process is where you're going to vet out whether or not they fit into your risk appetite. And you're going to look at these X, Y, and Z things. If you just out of your policy to bank growers at all, you may just say in there, it is our preference to not bank growers, but we on a case-by-case scenario. We will review all applications, and on a case-by-case basis, we may occasionally accept a grower under our program if we believe they're within our risk tolerance.
Perfect. Thank you for that. That's helpful. We had another question asking if they should be baking the different tiers of cannabis classification into their documentation, and if that's a terminology that regulators would understand, or if that's something that needs to be explained, if maybe they're not familiar with that concept.
Yeah, so our friend Steve Kimmerling came up with, from CRB Monitor, came up with the tiers years ago in like an ACAMS white paper, I think about 100 years ago at this point, it feels like. And I did a good job about laying out and helping us all kind of understand at a high level what how those tiers are broken out. Then later he came out with tier 1A, tier 1AB, and it got a little bit more fuzzy and complicated. He's the first to admit that. That's where we have really boiled it down to the direct and indirect supporters. It really simplifies the process in understanding this business can touch plants or this business can't touch plants. This business is licensed, this business is not licensed. And the more simplistic you can put it in nature in that regards to say, okay, we really understand our business is based on X and based on Y, and here's how we treat them based on the categories that they fall in, then that, instead of, I've seen them laid out to where it's like, my growers who do this get this, my growers who do that get that, my this and that, and then you start to overwhelm people, and then our policy gets too big and too complicated, and you're having board of directors sign off on something they don't even understand. Now I say all that, but I got two regulators in the room, so I'd like to know their opinion on how they'd prefer to see a policy written in that regard.
Personally, the more the better, in my opinion. I think in this day and age, especially with the regulatory bodies facing staffing challenges, just like we all are, and also just the struggles that come with knowing about the cannabis industry. I feel that if you were to put it in there, again, the more details, the better. I think it's only going to help you, not necessarily hurt you.
I'd agree with Brian and Kristen, actually. So the more you can put in there to educate your regulator, because when it comes from the regulatory perspective, you have individuals that are coming in that haven't actually practiced something, they've just reviewed it. So the more explanation you have in there on what you're actually doing, it's going to be easier for them to understand, and probably less of a contentious conversation when you actually have it. On the other hand, you don't want to paint yourself into a corner and set unrealistic expectations for yourself. So document everything, document it well, but make sure what's documented is reasonable and achievable within the program that you're running.
Yeah, and what we mentioned it earlier is laying out that story of how we got to where we are, right? We have in our policy, here's the legal statuses, here are the amendments that have been passed, here's the memo guidance, and here's how we look and define what a hemp business is, what a cannabis business is, and what those categories are underneath. My opinion is don't overly categorize, is where my comments come from. It's just like, I have read a policy that was 60 pages long before that put like all of their businesses in about 18 different categories. And I'm like, I can't keep up with who is supposed to be doing what here and when and why. So simplicity in the nature of, explain where our why is and how we got here and the legal status and all that, but don't over categorize and then muddy the waters with all of these different verbiages that people get lost in the policy, and then all of a sudden you're pissed off and you're frustrated because you don't know what you're supposed to be doing with what customer. Because you got to go back up to this chart over here to say, okay, who's a 1BC? Oh yeah, that's a grower, and now I'm supposed to be doing it with this.
Perfect. Thank you for those. I've actually got another question for our regulators here. And I know we talked a lot about today about wanting to make sure that our financial institutions are staying close with the regulators. There aren't any surprises. Definitely the last thing you want to have happen. But it's also a fine line in making sure that we're not bothering them or creating unnecessary work for ourselves. So how often should a financial institution be trying to connect with their regulators to make sure they're not going to be surprised, but also not creating more work for themselves that's unnecessary?
I would say I would definitely agree not to reach out to them on a monthly basis, maybe not even quarterly basis. But what I would do is I would suggest prior to your next exam. So if you're on an 18-month cycle, I would just reach out a couple months prior and just start having that dialogue with them that the institution's curious about potentially banking cannabis. What are they seeing? Is there any sort of guidance that they can provide? Any sort of recommendations, things like that, and just have that friendly conversation and see what comes out of it.
Yeah, and I think it also depends on really who your regulators are. So for example, with the OCC, most of the community bank offices are going to hold quarterly calls with their financial institutions. With some state and say FDIC exams and examiners, that might not be the case. So if you don't have that regular cadence already established, I think one good time to reach out is if there is a major change. And so if you're thinking about doing this cannabis program, reaching out and giving them kind of an idea of what your plan is, what it looks like, and to Brian's point, asking if there's anything wrong with that. They're going to be much more apt to give you information if it looks like they're scared of it, like there's something in there that's going to be a regulatory issue. So if you put a draft or at least some baseline ideas of what you plan on doing, that's usually a better way to get some real feedback outside of, hey, here's the guidance, go read it. But I think definitely just letting the regulators know what you're planning on doing if there are major changes. So if your program's already up and running, maybe you don't have that quarterly, semi-annual, whatever it is, communication with them about that because it's kind of a known thing that's occurring. But if you're planning on, say, adding in cannabis lending and previously you've only done cannabis deposits or maybe interchange, that could be a topic to bring up with them.
Yeah, and just a cautionary tale, we had an institution that had involved all of their regulators from the very beginning. We talked to them when they had about 10 clients. When they came in to do their annual exam a year later, they had 350 clients and hadn't updated their regulator, and that was not a very pleasant exam. So, updating them about the health and size of your program, at least before their exam, ensures they have the right staffing in place to do their job and do it in a timely manner. You don't want to get in that mess of didn't tell.
Yeah, end of the day, it's just not surprising people, right?
Right.
Awesome. Well, I know this was a lot of information. I just want to touch very quickly on, we went over the policy, the risk assessment, the ROI calculator, and all those things are good, but it also might be overwhelming, right? Starting something from scratch, whether it's banking or just family life, right? It can definitely be overwhelming. So I just wanted to let everyone know that, we at RiskOut have a cloud-based platform that can help alleviate that compliance burden that you might be experiencing when trying to, start a cannabis program from scratch. So if you're interested in getting a demo of our platform, just reach out to us. We left our contact information here. And just like Ethan said, I would say probably by tomorrow, you all receive the copies of the slide deck, the recording, the policy, risk assessment, and ROI calculator. So personally, I just wanted to thank you all for attending this workshop. Hopefully it was valuable, and yeah, definitely looking forward to seeing you soon.
That was great, Brian. Well said. And I will say we did answer all of the questions that we had come in. The only things we have outstanding are a couple of thank you notes that we got in the chat. Thank you all for your great answers. So thank you all to our panelists for the time, not only today of answering our questions, getting some of this great information out, but also for all the pre-work that came to actually produce those assets that we will make sure are in your inbox tomorrow. So big round of applause to the RiskOut group here. I know Brian mentioned the platform, but if you want more of these lovely faces that we have on the call today, we also do have advisory services. So if looking at that full risk assessment template or a policy template, it seemed a little daunting. You don't have the hands or time to be able to knock that out on your own. Fortunately, we've got this great team of former, as Kristen says, cheeks in the seats workers and some regulators that are on our team that are here and excited to help you out. So please get in touch if you have any additional questions that we weren't able to get to today, that you just didn't want to ask in a public forum. We're always here to help. We look forward to seeing you on a future call, and you can always find us at riskout.com for anything you might need. Thanks to our presenters, and we'll see you on the next one.